Hey there, everybody. Thomas Wood with Basecamp Trading. It is Wednesday, August 2nd, and we're going to continue on with the Mistakes Traders Make series. And today we're going to talk about why 90% or over 90% of people that decide they're going to trade the market actually are unsuccessful and fail and end up losing more money than they make. One of the big misconceptions that people have, and that I find with all these traders I've worked with throughout the years, is they think they need to always be right. They need to always be making money. That the successful traders are the ones that are correct on their trades 80, 90% of the time. And the majority of the time they're making money on and having winning trades. And that's a really big misconception. The reason it's a big misconception is because the traders that I know that are successful, the reason I'm successful and the traders that I've worked with have been successful. The number one thing we preach is understanding the concept of a reward risk ratio. Okay, so a reward risk ratio, all that is your average gain divided by your average loss. All right, and typically we want to try to keep our average gain at least about twice the size of our average loss. Now, the reason this is important is if we have a 2-to-1 reward risk, meaning on every winning trade we make $100, if on every losing trade we lose $50. The reason this is important is because it takes a huge burden off of our shoulders as traders, because now all we have to do is be correct 33% of the time, statistically speaking, or 34% of the time, statistically speaking, to be a net profitable trader, because one winner will pay for 2 losers. And it's a lot easier as a trader to be right 34, 40, 50% of the time than it is to be right 80, 90% of the time. Now, I'm not saying that you cannot be right 89% of the time. You absolutely can. And we have strategies that we use, things like pairs trades or hedge trades or market neutral strategies, where we have around a 1-to-1 reward risk ratio, but we have an 85% plus success rate with them. However, the real bread and butter trades come from that really good reward risk ratio and having that really good balance of a 2-to-1 reward risk with a 50% or 60% win rate. And that in turn leads to a very, very profitable equity curve. One of my favorite examples of this, and one of my favorite students to go back and talk about and brag about, is Dave Glissmeyer. And if you look here, you can see his win percentage is 66% and his reward risk is 1.5 to 1. But that balance with a 66% win rate and a 1.5 reward risk leads to a very, very smooth, profitable equity curve. And this is showing kind of the power of having that reward risk. And I remember I talked to him all the time, and he would tell me, yeah, the reward risk came in to save the day again. I had 2 losing trades, then 1 winner, and I'm net positive for the day. And it would happen over and over and over again. So the point of today's talk is really just to say, look, one of the number one reasons that traders don't make money and that they fail is they do not have a good enough reward risk. They cannot pay for their losses with their winnings trades. So keep that in mind. I hope that helps you with your trading. I will see you in the trading room bright and early tomorrow morning. Don't forget to like and subscribe. We're trying to get up to 20,000 subscribers here, so help us get there if you're enjoying these videos. And until next time, happy trading.